We are here again, thanks for staying on our channel. The next topic for today is share turnover. Definition, what it signals, formula, and example. And we promise you it is going to worth your time. Definition of share turnover. Share turnover, also known as stock turnover, is a financial metric that measures the frequency with which a company's shares are bought and sold over a specific period. It provides insight into the liquidity and market activity of a particular stock. Output. What does share turnover signals? Share turnover reflects the level of investor interest and trading activity in a stock. A high share turnover may indicate a liquid and actively traded stock, suggesting that investors are actively buying and selling shares. On the other hand, a low share turnover may suggest lower liquidity and less frequent trading. Formula. The formula for calculating share turnover is total shares traded average. Outstanding shares, share turnover =, average outstanding shares, total shares traded. Now let's look at this example so we can understand it better. Suppose a company had 1 million shares outstanding at the beginning of the year and 1.2 million shares at the end of the year. During the same year, a total of 5 million shares were traded. The share turnover would be calculated as follows. Average outstanding shares =, 2100000 plus 1200000 =, share turnover 5000000 1000000 4.55. Share turnover =, 1100000 5000000 55. In this example, the share turnover is approximately 4.55, indicating that on average, the entire outstanding shares of the company were traded 4.55 times during the specified period. Investors and analysts use share turnover as a tool to assess market activity, investor sentiment, and the liquidity of a stock. A higher share turnover may suggest greater market efficiency, but it's essential to consider other factors and compare it to industry benchmarks for a more comprehensive analysis. Thanks for your time and look out for more.